Good afternoon, everyone. It is Sunday, December 22nd, 2024. This will be the first part in the series for the Dagger indicators, what their concept is, what their application is, and how to use them. This will be an abbreviated run through with these. So if you have more questions following this video, please ask in the comments below or DM me in the Discord. You can find me on X at Dagger Capital. But we're going to get started. Today we're going to start with the Dagger SMA's indicator. So as you can see in the center of our screen here, I'm going to go over what we're going to cover. So today we will cover how this is tuned for the S&P 500. We're going to talk about the 1 hour time frame used for the standard day trading range, the daily time frame used when we break beyond the 1 hour 200 SMA. We're going to also discuss the significance of the 1 hour 8 and 21 SMAs used for short-term trend continuation. We're also going to cover the 1 hour 50 SMA, which is your major support resistance for short-term trend. Also, we're going to talk about the correlation between the S&P 500, so SPY, and VIX. Regarding the 1 hour 50 SMA relationship, there is a specific move that does repeat quite often. That's pretty common, so we're going to discuss one of those common setups to look for. And then I'll go over some examples of entries and profit taking, as well as exits from a day trading standpoint. The final thing we're going to talk about is when to switch from the 1 hour time frame to the daily time frame. So just starting out, some of the salient characteristics with this indicator that's available in the Discord server shop. This utilizes my specific SMAs based on historical consistency with price action data. So this is through observation and me backtesting multiple SMAs. And when I start seeing patterns, when I start seeing things that happen over and over and over and over, that is what I'm trying to build for any type of trading system that I'm using. So that's one of the salient characteristics with this indicator. It uses my specific SMAs based on my own backtesting with price action data using the S&P 500. Number two, the ability to isolate the time frame data while trading on lower time frames. So if you like trading on smaller time frames like the 1 minute chart, for instance, you do not have to switch to the 1 hour chart in order to see these SMAs or the daily chart in order to see these SMAs. You can in fact trade on the 1 minute chart while the hourly data is on your screen. So this indicator, one of the salient characteristics is you can isolate time frame data, pull it from that time frame onto your chart in the current time frame. The third salient characteristic of this is the ability to customize your own SMAs however you want. So given that I provide you the actual source code, which most people do not, but I find value in that because if you have a certain trading style or you have certain SMAs you like using, you will be able to customize this indicator and basically make it your own. So that is, I was thinking about it. If I had something like this, I would want the ability to change it and to customize it myself for maybe a different trading style, or maybe you trade Bitcoin and you find that certain SMAs work better with Bitcoin. So a lot of great salient characteristics with this indicator. So starting out, we're going to do the very first one to start. We're talking about why is it tuned for SPY? What was the significance for that? Okay, so the significance for it being tuned for the S&P 500, and you'll see me pull it up right here. It's the Dagger. I'm working with the Dagger 1 hour SMAs version 3. So this is the version 3 update. Anyone who does purchase the indicator suite gets all of the indicators in that suite, past, present, and future indicators in that suite, and all the updates included. So just to paint the picture there. So we're going to cover the 1 hour SMAs version 3. So why is this tuned for the S&P 500? The reason is I want to, when I started this, gosh, 3.5 years ago, when I first started building this indicator, I wanted to utilize and build some tools that I could use every single day, trading the same ticker every single day. So in this case, I'm primarily trading ES right now. So I'm trading the S&P 500 via futures, but I have it tuned for SPY for a number of reasons. Number one, the volume. The volume is a lot bigger. And number two, I've just found more consistency with building my indicators off of the S&P 500. And what's interesting is being that when I do build these indicators off the S&P 500, I've also been able to apply some of them, and actually most of them, to some of like the Mag 7 and some of the bigger tickers you'd see in some of the top ETF holdings. So, tuned for the S&P 500. Why was this created for me? I wanted to take the concept that I saw on the daily chart people were doing with daily SMAs, and I wanted to find something that was more consistent for a trading range, ideal for day trading. So we're talking, week over week. These SMAs I've found on the hourly time frame have actually been very helpful for a number of reasons, and we'll get into those shortly here. So that's the first part, being that they're tuned for SPY. Number two, the 1 hour time frame used for the standard day trading range. So when you take a look at this indicator and you go into the settings, you'll notice it says time frame. So I go into my settings here and it'll say time frame 1 hour, and notice how you can select any of these time frames you want if you wanted to. So if you look at let's go to the 5-minute here, and if you look at this orange one, this is my 50 SMA. So if I wanted to change that 50 SMA down here to, let's do the daily 50 SMA, look where that just moved that, right there. Okay, so notice I'm trading on a 5-minute chart, and it's pulling up the daily 50 SMA right here. Now notice it says 1 hour on the label, and that's because I made it so you can label it accordingly. So down in here, the line label, I would change that to daily to reflect the time frame data. So you can label them however you want. You can select the time frame you want, the length, the color. So a lot of good stuff, a lot of good features that you can do with this indicator. So I'll keep it up on the hourly time frame here. Next up, the daily time frame used when we break beyond the 1 hour 200 SMA. So the times that I will jump out of the 1 hour SMAs are when I break this 200 SMA, which is here, this purple one. So you can see during this particular week, we stayed within this 200 SMA. Generally, the 200 SMA is kind of like that last line of defense in the current trend before things get really crazy and I have to switch to the daily. So you can see here over the next couple weeks, we started flirting with it. On this day, we started rejecting it. We lost it. So now we're looking at some potential big moves now that we're trading outside of all of these SMAs. Now they're in a cluster. You can see here the day before it dumped. And then here was FOMC. We made that break. The moment we made that break, here's what you do when you transfer from the 1 hour. So this would be one of my rules here. Whether we, especially in this case, are going to the downside, we're losing all my 1 hour SMAs. Whereas if you look in the weeks prior and the days prior, these SMAs were actually very helpful. In this case, on a day like that, they're not going to be as helpful. So we have to open the door now to the daily SMAs. So I'm going to do that right now. I'm going to change all of these to the daily SMAs. And most people use the daily SMAs anyway. Most people do. But most people don't use the hourly SMAs. So for instance, back in October, here is SPY. We lost a bunch of my daily SMAs. What did we do? We double bottomed off the 50 SMA, and then that led us to new highs. Came back, pulled back to the daily 21 SMA, triple bottomed off those, led to new highs. So in this case here, what did we do different? We not only broke the 21 SMA, we broke the 50 SMA. And now we reclaimed that 50 SMA. So where are we going to go next? If we can base above this 50 SMA, I'm targeting the daily 8 and 21 SMAs up here at the 600 level. Let me zoom out here. So here's we're going to move on to the next part with these here. So let me turn on my text box. Take a look at this here. Okay, now we're going to talk about number 4, the 1 hour 8 and 21 SMAs used for trend continuation. So we're going to talk about trend continuation now. I just kind of showed you how to navigate and switch the indicator to different time frames. I'm going to switch it back to the 1 hour now. Okay, so for simplicity, I'm going to turn off all the SMAs except my 8 and my 21. So my 8 SMA is going to be the yellow one, and my blue SMA is going to be the 21 SMA. Okay, here we go. So trend continuation. So the white and the blue, especially at market open or before lunchtime, are going to be your hit zones for these trend continuation SMAs. So here's going to be an example. Actually, I have so many examples. If you look at this day when we gapped up above these trend continuation SMAs, you can see what trend are we in? A bullish trend. So what do I want to see for continuation higher? I want to see support. So we had support at the 21 SMA. We trended higher, pulled back, trend continuation, held off the 8, and we made new highs. The following day, however, we were trading below the 8 SMA, right? And it's a bullish trend. So we're trading below the 8 SMA, reject, reject, reject. And so what do we get? We get a move to the downside because we're not sustaining our continuation SMAs in the current trend, which is bullish. Here's the following day. Right at open, we come down to the 21 SMA. What's at risk? If we lose that 21 SMA, we have to look for the 50 SMA right here. Below that is the 113. So there's this big space way down here is at risk if the continuation SMAs are not held. What did they do? The 21 SMA was bought up, and we headed higher for the day. That's a good trend day, which is why I call them trend continuation SMAs. They tend to lead to trend days. They tend to. And then there's going to be days where you're not really respecting them at all, and we just have choppy inside days. Here's another one. We held the 8 SMA twice. We didn't really go much higher, but we did. On both of these days, off of our highs, we pulled back to where? The trend continuation SMAs. Those were our lows. 2 days in a row. And then we had this set up the following day. Lost my trend continuations to the upside. Where did we go? We went to the downside. There's the 50 SMA, and oh, look at that. The 113 SMA, right? So the point here is really the 8 and the 21 SMAs set up an entry for a move in a particular direction, and we can utilize the 50, the 113, and the 200 SMAs as basically targets. Okay, so basically targets we're talking about, if there are targets available in the direction that we're trending. So, let's see here. And this is both for the bullish case and the bearish case. So let me go back here for a second. So you see a day like this open up. You reject off the 8 SMA for SPY. And you look at the chart and you say, okay, so what do I have below me? What is this signaling? If I lose this, if I don't reclaim these continuation SMAs in this bullish trend, what is at risk? Well, number one is this green 113 SMA. Number two is the 200 SMA. We ended up achieving both. We even got the gap down that essentially brought us to that 200 SMA. So the big so what with the 1 hour is we use the, here's an interesting day right here. But the big so what is we use the yellow and the blue, the 8 and the 21 SMAs, as kind of your trend continuation, validation, and also they can be entry points in the first part of the day between market open and noon. And then we use our other SMAs, the 50, the 113, and the 200 as kind of a general price target, a general target in a particular direction. So you can see on this day, not really good support down here off the 8 SMA. So what do we have above us? You know, if I do replay mode and we just kind of play this out as the day goes on, we see the 21 SMA up here. We see the 8 SMA there. So the short off open off the 21 didn't make sense. But then we recover. And then where do we go? Here's the 21. So this right here, being that I know it's a trend SMA, and knowing that I'm in a bearish trend right now because from the days before we actually broke below the 8 and 21 SMA to the upside. So since we broke below that and now we're retesting them, we're now retesting them as trend continuation as far as resistance is concerned. So here's the magic setup right here with the 21. One of my favorite setups, the 21 SMA pop, especially for a downside. I love that. I love that setup. And we see what happens. Look, it all fell apart off that 21. So, boom. See, in the big picture, you look at it and you're like, the trend flipped. We had some follow through. The next day we popped to retest it. And then that retest led to a nice follow through move for the day. So you kind of got the gist of why I really like these. I use them and use them for trend a lot of times. And you'll see like on a day like Friday. Friday I called the 579 level as my key support. If we held that, then I was long. Most people I know, at least in my Discord, we all went long. And look what happened. We tested that same 21 SMA. We did not reject it. So immediately, I'm thinking we're going to the 50 SMA. That's the next general target, being that we're trading above the trend continuation SMAs, being the 8 and the 21 down here. So we're not going to continue the trend. We're going to go to one of my target SMAs, the 50, 113, or the 200. Okay, moving on. The 1 hour 50 SMA, major support resistance for short-term trend. I'm also going to couple this with number 6, which is SPY plus VIX, and that's the 1 hour 50 SMA relationship. So in the short-term trend here on the hourly chart, what this is saying is this 50 SMA is like a volleyball net. In order to continue to play the game, in this case, to go to the upside and see us continue higher, we have to get above the 50 SMA. And then we can go see my 113 and 200. If we don't, then we're going to continue in the short-term trend, similar to the 8 and 21 SMAs here. The 50 SMA is basically my volleyball net. It's the line in the sand. It's a more exaggerated type of a bounce on the hourly time frame with this the hourly SMAs. So it's a little bit more of an exaggerated bounce, and it's okay. But one thing I do want to point out, use this indicator for VIX as well. And there are going to be days where VIX, here's a day. I'll see if this lines up. I'm noticing it right now, where VIX will reject or bounce off of the 50 SMA. And when it does, keyword when it does, if you see SPY doing the same thing and bouncing or rejecting off the same 50 SMA as VIX on the same day, then there's a huge reversal risk for the S&P for SPY. So that day that we were just at on VIX was actually the, let me find it here. It was the 27th of November. Let's see if I can make something of this here. So here's the 27th of November, and you can see we actually traded a little bit below, but then we recovered off that 50 SMA, signaling we're not going to go much lower. So if I look for another example, see if I can find a 50 SMA rejection. Let's see here. Rejection or bounce? That's 11:20, so Monday. Yeah, there we go. Let's try October 21st. VIX rejected the 50 SMA. October 21st. October 21st. Nope, not on that day. There was a 113 there. But anyway, I'm not going to keep searching for one right now. I can do that at a later date. But, and I encourage you to check it out too. The key thing with that is that's one of the more common. If I see a coincidence of SPY's 50 SMA and VIX's 50 SMA, and we're rejecting / bouncing off of that SMA at the same time, you just got to keep in mind to watch out for that reversal. All right, next, examples of entries and profit taking. We did cover that. I mentioned the 8 and the 21 SMAs, also the 50 SMA as well. When to switch to the daily time frame. Okay, here's the last piece here. The time to switch to the from the 1 hour chart to the daily time frame is when you break out of the range of all of these SMAs. So like FOMC would have been a good example I showed you earlier. Let's see here. Maybe I can go back to August. I'll go back to August. So here we go. So here's an example. Here's all of the SMAs here. The last one being this purple 200 SMA on this day, July 18th. That's when I would have started turning on my daily SMAs. So if I go to my inputs here and I switch them, and there you go. So just gotta switch the 200 here, and we're good. So we're trading below that 200 SMA, so it's time to pull out the big boys on the 1 hour chart. And you can see here, look at the ping pong we played off the daily SMAs going forward in the downtrend. So from July to August, daily 8 SMA here. Okay, went down to the daily 50 SMA, then bounced up to the daily 21 SMA. Then we found this 113 SMA down here, right? So that's a good application for when to turn those things on, is when you start breaking out of that range, out of the hourly range. So that pretty much summarizes the Dagger SMA indicator. The main purpose of it was for me to be able to isolate the time frame data that I use on the hourly, daily charts, and even other time frames, but to go on like a 1 minute chart and to be able to see all those levels on that same time frame that I prefer to trade on and do my entries and my exits. So that concludes the video. Please let me know what you think of the video in the chat, and stay tuned for some more follow-on videos regarding some of the other indicators. All right, thanks for joining.